Hello, everyone, and welcome back. Let's take a look at Mullen because I took out a huge position today, had to set a stop loss, and decided to come back in after hours. I'm going to talk about that. We're going to go through the charts. But first off, we've got to talk about this Fed meeting and the speculation of how tomorrow could play out. Now, of course, these are speculative guesses, and I want you to bear with me as I'm trying to get this as close to right as possible. And we're getting a lot correct, but we have not found a bottom with this stock. And I do believe in buying on red days. I believe in buying close to the market timing that's proved itself in the past, and that would be today or tomorrow. So tomorrow morning before the Fed speaks. But there's some things that could happen, and there's a lot of factors playing against Mullen at this point. So we're going to talk about those. But just know, I am not trying to mess this up, and I want to get this as close to possibly correct as possible for each and every one of you. Now, a lot of people have a very high cost average, and they're just looking for this to reverse. Nobody's looking to sell their position. They're willing to accept the pain. But if you're able to set a stop loss, mitigate your risk, this is something that I wasn't even considering myself until 52 cents. And then when it hit 52, it went to 48, 46. I expected that. Then 45.5, that was buying, especially this close to the Fed meeting. And with a reversal in the major indices, I'm going to cover it all. The Fed Reserve is expected to approve its third consecutive interest rate hike of 0.75%. The reason I want to cover this is the Wall Street Journal, and typically they get this right. And it says down here that it just wouldn't make sense for them to go to 100 basis points, fundamentally change, the amount that they're going and coming extremely hawkish, especially with only 1 month's worth of data, and it was going down. So they would need to see another month's worth of data, but the Fed isn't coming back out till November. So October, nothing's going to happen. But if the Fed's tone is extremely hawkish, and it does talk about unusually high interest rate increases in the future, if we cannot get inflation down or CPI down to 2%, then there could be a negative market reaction. So the first thing that I was looking at today, I was looking at the major indices, and they dipped down towards 2 p.m., each and every one of them, and I expected that this was the bottom, not only for Mullen, but the major indices for the day. So this is where I wanted to take a position because I knew tomorrow would be only another buying opportunity, and we were getting close to possibly having a reversal. So this is the market timing aspect that I may have gotten wrong just a little bit, obviously. So Ford also, we talked about this, playing pressure in the market, and this had a massively high volume with a 12% loss. Now Mullen had a high volume trade, and it's up here, and even the ownership, you could see that it is starting to get updated. The financials here, the outstanding shares are at 509 million. So they are up, but this still has further to go. This needs to get updated. So that's the next thing that I was looking at. It was still liquid. We had Ford up here on losses. We had the EVs that were all at a major loss. So today is red day. You buy on red days. I don't buy on green days. I don't chase stocks when they're running. That's just my method. I like to buy in the red, and I don't want to take a loss. So let's talk about that. Let's talk about the methodology and why I bought. First off, let's go to the daily chart because I just want this to make sense. It was oversold in the daily, and the last time that it was oversold in the daily, it came back. So this is what I'm looking at right here. I'm looking that the last time that this was oversold was back in May, and this is the trigger that makes me want to buy, especially coming this close to the Fed meeting. Now this is what happened today. As soon as I got done with my video, I bought, and then at a 3% loss, like I do not like losing. So I set a stop loss, and then if I miss it, I miss it. That's my fault, and then I'll make it up on the recovery because historically, back here at 52 cents, you could see if you bought in at 52, there were opportunities to gain that back. So what I plan on doing is gaining that percentage back of that 3%, 3 to 4% upside in the pre-market, and then selling off and then coming back in again after this drops back down, if it does before the Fed meeting or during the Fed meeting. Now this needs to establish a bottom because I'm not going to play this game, and I need to make sure that this does confirm, and I want to be in this play just due to volume, and I do believe in some of the catalysts that are coming up. But this shareholder dilution is no joke. Now, here is how you set a stop loss if you want to use this method in the future. And it might be too late for some of you to do that, but all you have to do is establish your buy line and then come in here and say, okay, I do not want to take more than a 3% loss. So that's going to be your 3% loss. And if you follow this over right here, that's going to put you at about 44.12. 44.12, it activates a stop loss. This could continue running back up. This is going to put you out of the trade, but you don't want to put your stop losses too tight to where it's going to recover. So you want to have some flexibility within your stop loss. But then when it's dropping, you have to decide whether after hours this is going to take off and you're going to be able to recover that 3%. Now, just to be clear, I did get back in this play, and let me know what you think in the comments below. 43.75 is where I got back in because I wanted to be in after hours. This did run up to about 44 cents. I did not take anything. I'm going to wait until the pre-market and see how the market responds. If it decides to rally just a little bit in the pre-market, I'm going to take profits. I've got a stop loss set at 42.90. This would be a 1.94% loss in addition to the 3% loss, which puts me right under a 5% loss, and I'm looking for this to establish a bottom. Now I want bottom confirmation if I get a second stop loss on this trade, and I'm willing to take the loss at this point because that's just the general direction of the market, and I can make this up in another trade. That's no problem. There's plenty of opportunities to play the downside in other plays, just like FedEx that I shared with the upside opportunity when that came down, and Ford, like we mentioned before, that was an opportunity to bet against Ford when you got that news. So when you see these major news catalysts come out, try and anticipate the way the market's going to respond, confirm that trend, and then execute the trade. Another method is that you take a look at the impact that the stock had that caused the rest of the prices to go down, and you look for an opportunity outside of what you're trading. Like LEV, Lion Electric, is massively down right now, and I've got a lot of faith in that company. And it might not be sexy, and it might not have a major catalyst coming up, but they have established revenue. They've got a massive plan for building out their infrastructure, so on and so forth. It doesn't have to be that one. You could look at another market cap that's much smaller, like FFIE, if you like high risky plays that have taken a massive loss for the day and have a high volume trade. You could diversify. So those are just some of my strategies. I hope this video helped you, and be sure to check out those 12 free stocks in the comments below by signing up for a Webull account. People are having some great luck getting some free money down there. Make sure you sign up, deposit some cash, and any amount that you want. Get access to those IPOs. Those IPOs are absolutely taking off still. And that's all I got. I'll see you guys in the next video.